I want to tell you about a seller here in Hampton Roads. She listed her home. Good property, good price. Within 8 days, she had an offer. Strong price, solid financing, a motivated buyer. She turned it down. Not because of the price, not because the buyer couldn't qualify. She turned it down because the buyer was using a VA loan. She had heard enough about VA appraisals and repair requirements that she decided it wasn't worth the hassle. So she waited for a conventional offer. She waited 6 weeks. When that conventional offer finally came, it was for less money. And in those 6 weeks, she had paid 6 more weeks of mortgage, utilities, homeowners association dues, lawn care, and insurance. She accepted anyway. And she walked away from that deal having lost somewhere between $4,000 and $8,000, all of it preventable, all of it based on information that was either wrong or out of date. Here's what I want you to understand. In Hampton Roads, Virginia, turning down a VA offer is one of the most expensive decisions a seller can make. And most of the reasons sellers give for doing it are myths. Let's go through them. Myth number 1. VA appraisals are stricter, and they will kill the deal. Let me explain how a VA appraisal actually works, because most people, including a lot of agents, don't understand the full picture. A VA appraisal has two jobs. First, it determines market value, the same as any other appraisal. Second, it confirms the home meets the VA's minimum property requirements, standards that make sure the home is safe, sanitary, and sound. That second part is where sellers get nervous. They picture an impossible punch list. Here's the reality. In May of 2026, the VA updated those requirements. It is a set of changes called Change 46, and it removed some of the biggest sticking points sellers and agents had complained about for years. Peeling or chipping paint on a home built after 1978? That used to be a required repair. Under Change 46, it is now treated as cosmetic. It is not required to be fixed for the loan to close. Detached sheds, fences, and garages not attached to the house? The requirement to evaluate them was removed entirely. Radon testing? Removed. So what does the VA actually require? The same things any reasonable buyer would want. A roof that doesn't leak, electrical that works, plumbing that functions, no active structural problems, no active pest infestation. If your home has a failing roof or exposed wiring, a conventional buyer's inspector is going to find that too. The VA appraisal isn't the problem. Deferred maintenance is, and there is one more piece. The VA has a built-in process called the Tidewater Initiative. If the appraiser thinks the value might come in low, they have to pause and notify the lender before they finalize anything. That gives your agent 48 hours to send in more comparable sales. And if it still comes in low, there is a formal reconsideration of value process after that. A VA appraisal actually has more chances to reach the right number than a conventional one does. Myth number 2. VA buyers are risky because they are putting zero down. This one gets under my skin a little because I have used a VA loan. I know what it means to earn that benefit. But let's just deal with the numbers. VA borrowers have lower default rates than conventional borrowers. Not slightly lower, measurably lower, and consistently across market cycles. That benefit is earned through military service, and the underwriting still requires full income and credit qualification. Zero down does not mean zero qualification. It means the VA's guarantee removes the need for mortgage insurance and the traditional down payment. VA loans also have a higher closing success rate than conventional loans. When a VA buyer is under contract with a good lender, that deal closes. The idea that zero down means a fragile deal is just not supported by the data. Myth number 3. VA loans take longer to close. With an experienced VA lender, and Hampton Roads has some of the most experienced in the country, a VA loan closes in 30 to 45 days. That is the same timeline as most conventional loans. Where it gets slow is when a VA buyer uses a lender who doesn't do much VA volume. But in a market like ours, where 43% of mortgage purchases in Virginia Beach are VA financed, there is no shortage of lenders who have done this 100 times. If a seller got burned by a slow VA closing before, the problem was almost certainly the lender, not the loan. Let me make this concrete. A seller lists a home in Chesapeake at $465,000. On day 10, they get a full-price VA offer from an active duty buyer. They turn it down because they have heard VA appraisals are difficult, so they wait. Over the next 47 days, they keep paying about $1,850 a month in mortgage interest, $180 a month in homeowners association dues, $140 in utilities, $120 in lawn care and upkeep. That is roughly $3,500 in carrying costs. Then a conventional offer comes in, $458,000. They take it. So where did they land? $7,000 below the original VA offer, plus $3,500 in carrying costs. The total cost of that decision was over $10,000. And the appraisal they were afraid of? In Chesapeake right now, with the median around $475,000 and homes selling at 100% of list price, a well-priced home at $465,000 was not at risk of coming in low. The fear was not based on data. Here is another one. A seller in Norfolk lists a home built in 1987. A VA buyer makes a strong offer. The appraisal gets ordered. The appraiser shows up, and here is what they flag. A small section of peeling paint on the exterior trim, a gutter with a separated joint, and a request for proof that the heating and air conditioning system was serviced in the last year. That is it. The gutter cost $180 to reattach. The paint cost $85 in materials and 2 hours on a Saturday, and the heating and air company emailed the service record. The deal closed on day 31. Her previous agent had told her VA appraisals were, quote, notoriously difficult. The appraiser found 3 items. 2 of them cost less than $300 combined. And that peeling trim paint on a home built in 1987? Under the old rules, that was a required repair. Under Change 46, which took effect May 1st of 2026, it is cosmetic. It would have been off the table entirely. Now here is the number I want every Hampton Roads seller to hear. In Virginia Beach, 43.2% of mortgaged home purchases are done with a VA loan. That is the highest VA loan share of any major metro in the United States. So if a seller decides before a single showing that they will not accept a VA offer, they have just removed 43% of their buyer pool on purpose. In a market with a month and a half of supply and homes selling in 9 days, that might not cost them visibly right now. But what happens when the market shifts? What happens in the price ranges where VA buyers dominate? What happens if the home just sits and nobody tells the seller they have been filtering out almost half the market? And think about the seller in Suffolk's attached market right now, where inventory is over 4 months and homes are sitting 44 days, who has a no VA policy they have never once reconsidered. That decision in that market is costing them money every single day. Here is one more thing most sellers don't know. The VA lets sellers contribute up to 4% of the home's value in concessions. Conventional loans usually cap at 3% and sometimes as low as 2%. So if a buyer needs help with closing costs, a VA transaction actually gives you more room to build a deal that works for both sides, not less. So let me talk to you directly. If you are a seller, evaluate every offer on its actual merits, not on the loan type. When a VA offer comes in, here is what to look for. Is the buyer pre-approved, not just pre-qualified, with a VA experienced lender? Is that lender local or regional, with real VA volume here in Hampton Roads? And what is the closing timeline in the contract? A strong VA offer with a good lender is not a risk. It is a qualified buyer with a government-backed guarantee on their financing. In this market, that is the majority of your buyer pool. So before you filter anything out, ask your agent one question. What is the realistic conventional buyer pool at this price in this neighborhood right now? And what does it cost you to wait for them? And if you are a VA buyer who has run into this objection, there are things you can do up front before it becomes a problem. First, choose your lender based on VA volume and local reputation, not just the rate. A letter from a lender your agent knows and the listing agent can verify carries weight. Second, if you are comfortable and financially able, consider an appraisal gap clause with a defined limit. That does not mean waiving the appraisal. It means being clear about your ability to cover a gap, which lowers the seller's perceived risk. Third, have your agent talk to the listing agent early, before the offer, to establish that the VA process with this lender in this market is not the risk they think it is. I work with military buyers on this every single week. This is solvable. And if you are in Hampton Roads on either side of this, hear me on this part. This is a military market. It always has been. The buyers showing up for your home in the neighborhoods around every base in this region are veterans and active duty families who earned the right to use this benefit through their service. Turning down a VA offer because of myths the data doesn't support isn't just a financial mistake. It is a mistake in a community that is built around these families. Now, I am not saying take every VA offer no matter what. Evaluate each one on its merits every time. I am saying understand what you are actually looking at before you decide it is a problem. So here's what I will leave you with. If you are a seller with questions about a specific VA offer, or you are a VA buyer who has been told we are not accepting VA offers, call or text me 757-839-1094. That is a conversation worth having. And if this changed how you think about VA offers, share it with someone who needs to hear it, an agent, a seller, a listing you know that has been sitting. I'm Mario Dove. I'll see you in the next one.